Perfect. I'm gonna hit start. All right, Herman, I'll let you do your thing.
All right, ready to go. So we are letting people in. Good evening, everybody. I see everybody's coming in. Welcome, welcome, welcome. Hello, everyone. Hello, everyone. Hello, everyone. Thank you for joining us tonight. We appreciate you guys coming out tonight. Hello, welcome, welcome, welcome for joining us tonight. We have an amazing class tonight. I thank you guys for showing up. I know you guys have been waiting all night. I appreciate you guys. I've been looking forward to this call. Also, Hiram, when he called me and told me what he had, I was super excited. So I'm very excited that Hiram is on the call tonight and his amazing team. Craig is in the building, Ryan is in the building, Thomas is in the building. So we got some wonderful surprises for everybody tonight. And I thank you everybody for joining us. So anybody that's new to me, my name is Herman Dulce, Haitian CEO of Bella Sloan Enterprises. And we are here to help everybody fund their dreams. And I'm super excited to help everybody do that. I know one of the most important things that has been happening, post-pandemic is everybody's getting right back into starting their businesses. Real estate has been something that we have been trying to help our team, our clients get funded for. Hey, everybody in the chat, we're seeing the love. So we want to make sure that we are putting everybody in position so that they can get capital as easy as possible to fund the deals that they're trying to do. So I'm not going to talk too much. I'm not going to bore you guys too much. I'm just here to give you game. I'm here to help everybody get assets only. So let's get started for tonight. So the first speaker that we have for tonight, I know you guys are going to be super excited about this. He's spoken at almost every single mentorship that I have. We have the CEO and owner of LFG Ladder Financial Group. Hiram is on the call for today. But before Hiram, you start, anybody who has a question, we have an amazing team of people that are behind the scenes that are going to be answering your questions in the chat. So definitely drop your questions in the chat and the team is going to answer them. But please, let us get to the presentation. Let us try to answer your question in advance and let's see what we can do. But good evening, everybody. Thank you for showing up. Hiram, CEO, fellow CEO, thank you for joining us tonight, bro. Thank you for putting this together. Talk to the people. Let's see what we can do to help them out right now.
Absolutely. I really appreciate it. Super humble to be here tonight. I mean, right now, we see a lot of lenders kind of move into a different switch into, okay, where do we find and where do we invest our money into in an industry that is booming? Yes, it's real estate. It's the most lucrative business right now that we found. It's the most amazing opportunities that we can find out there. And this is that type of opportunity that if you've been looking for passive income, just like Herman says all the time, you got to create these different streams of income for yourself. For what? It's legacy, right? You leave this for your children and their children, all that good stuff. And the most amazing thing that you can actually walk into is into real estate. But a lot of the pitfalls that we find a lot of times is, how do I get into this game? And how do I come up with this money? How do I get this bag to be able to get to the down payment portion and then finally start becoming a flipper and then start having 10, 20, 70 doors in less than 2 or 3 years, right? So it's all game. It's all about strategy, but you got to be able to find the right places, right? You can't be knocking on doors and asking for something in the wrong places. So here tonight, what I definitely want to do, I brought some amazing speakers here tonight. We're going to go into a lot of different topics and a lot of skill set that you need to be able to write down. Please stop the camera right now or whatever. Go find a pen and paper and write this information down, because I'll tell you, a lot of people are charging thousands of dollars just for this game. And we're here to present it to you, in connection with Bella Sloan. So let's dive right into it. If I may, I'm going to present my screen here really quick. And all right, let's get this party started. All right, guys. So one of the things that I want to present here to you is the real estate game, right? The real estate game is hot and is a hot topic right now. So today's webinar, we're going to be covering what we call REI, or real estate investing. For some of you that are brand new into the real estate world, but it's going to be a fast track REI process, right? And this is what we're gonna cover a lot of different points here tonight, but this is a comprehensive roadmap to procuring real estate with no money out of pocket. And this is important, right? So meet the panelists tonight. Myself, you guys see me on some of your webinars and maybe with Herman, but I'm all about consumer financing. I'm all about making sure that we can find the right instruments to be able to fund ourselves. We'll also have Craig, my business partner here, that will also be covering a lot of the details about how to be able to obtain the type of funding that you need and how to be able to secure that bag. But before you do, what necessary things you need in order for you to get that single beautiful word that we all love, or either stamp on a piece of paper that says approved, right? So Craig, just say a quick hello to everybody here.
Hey, everybody.
So with that being said, we're going to dive into the details. So today's talking points is very important. We're going to get into real estate with no money out of pocket. This is a game changer. All right. A lot of us has been looking at properties that are 40, 50, 80, $100,000. You're potentially driving every day through that property. You say, man, if I had the money to invest into that property right there, I would create the most beautiful home for somebody and make money while I'm doing that. So we're going to cover how to use banks and credit unions money to invest into real estate. Believe me, credit unions is what we call sleepers in our industry. A lot of us don't know what credit union to knock on, but we already have all the field tested opportunities that are out there. We've tested some of these credit unions, we've tested some of these national lenders, and we found out which one of the best that had the best niche, no questions asked type of opportunities, right? We always love those lenders that don't ask too many questions. And the reason why I always say that is because the more questions a lender asks, is the more that they are asking, because they don't want to loan you the money. They see you too much risk. So it's mitigating that risk, lowering that risk, and getting you that one secret word that we always love to hear is approved. How you can get up to $300,000 and not use the property as collateral. This is very important, right? If for whatever reason you have 10 doors, you're at 10 properties or 20 properties, right? And there's no liens attached to them, and you know how to secure your bag and not have any liens attached to them. The greatest thing about it is that if things go wrong, there's no banks knocking on your door for it, because they're not attached to a lien, okay? How to use these funds if you need additional capital for rehabs. I can't tell you how many times per week we get these applications. We get hundreds of applications on a weekly basis, and people are saying, I just need additional money to finish this project. If I can just get another $30,000, $40,000 more, because when you're starting in real estate, you don't know the unforeseen situations. You might have just gotten into that house, everything was good. You got some guy out of town that he's local, maybe you knew him, maybe you don't, and all of a sudden you go in and the foundation is all messed up. Well, we need to make sure that we can secure that money and have that money on the side. So if any of these unforeseen situations happen in the beginning, right, we don't know what all the tricks of the trade in this industry, but you know, the additional necessary money that we need to be able to fund these projects and complete, get in, get out. It's not about sitting on a property for 6 to 9 months. Every day that you have all that money that you're putting in, which what we call holding money, it's not necessary. You don't need to have this property out, you know, just sitting as inventory, still stagnant inventory, and not flipping this property. You need to be able to get in, get out, and make your money. We're also going to be talking about non-asset-based gap funding, how to allocate these funds towards a down payment in order to do what? Purchase more than one property at once. You'll be able to learn how to reverse engineer the process and secure funds first, property second. Big mistake that a lot of us do sometimes when we get into real estate, we go and get ourselves that pre-approval, but there's no property in place. So then we have one approval on a property that we thought we wanted. All of a sudden, the person that from yesterday that looked at the property has their money secured. They go in, or either you're competing, because you got to get into that very competitive mindset. You're looking at a property, you need to have these funds readily available to make an offer, and then put your money down, and then now let's start securing the rest of the property, right? And then of course, we're also going to make sure that how to use this strategy for other non-real estate ventures. You might be considering on doing Airbnbs, right? A lot of times right now, you know, a lot of people ask me, hey, listen, I want to get into real estate, but I want to do some other things, property management, or some Airbnbs. How many of us are here that have actually asked in New York City or Philadelphia or any of these big major cities, that a lot of people may have an apartment that they have not been able to lease, but offer them a whole full year of like, hey, I'll pay your whole year up front and let me Airbnb your property. It's not your property, but you're making money. right? It's all about making money in different streams of income. So let's get into one of my favorite quotes, which I love, it's one of the things that I do. I love and breathe real estate and also any types of other funding programs. But I always say, landlords, real estate flippers, and entrepreneurs grow rich in their sleep, while employees lose sleep worrying about how they're going to make it to payday. This is very important, and the reasons why I think about this is that whatever we say here, you got to be able to now divorce yourself from that W-2 job and start figuring out how you're going to be able to create that generational wealth, right? It's not worrying about building somebody else's empire and dreams. It's all about how you're going to be able to provide for other families that now work for you, okay? So moving on, what we have here is 3 points. 3 points that I want to cover here very, very briefly through this whole webinar is money first, property second strategy is what we're going to be covering here today. Compounding different funding sources, right? And we have a guest speaker here tonight that I want to let you know. He's flipped millions of dollars in real estate and has been using this strategy from day one. We're teaching the whole game here today. And the third thing is executing on property procurement or purchase. How is that I can now, once I have the funding, how can I find properties? Because this is very unorthodox. This is something that is not conventional. A lot of us have been trained to go through these different measures and procedures and process, but ultimately we're reverse engineering this whole process, where a lot of times through this whole process, 95% of the time, you don't even need an appraisal, but you got to do a little digging and find out about the buyer, who they are, what property you can do, potentially virtual walkthroughs on these properties so that you can acquire these properties pretty much from another side of the country. And this is powerful stuff, because if I can't fly there, or I'm not there, or I'm not in that local area jurisdiction, I need to be able to acquire properties because I have 150, I have 300,000, I have $500,000 to invest. Okay, now it's time to procure this property using this strategy. Okay, so going into the details, money first, property second strategy. All right, so let's reverse our thinking here. Where usually or typically is property first and then money second. That does not help you. That strategy of property first, money second does not help you, especially in a competitive world called real estate investing. I promise you, I can't tell you how many times we've gotten a beautiful offer for somebody of 90%, 95%, or 100% financing, and we're working on diligently to get them an approval within 6 to 8 hours. And the person that sold that property yesterday has already made an offer and they beat you to the punchline, right? You don't never want to find yourself in a situation where somebody already did their due diligence and their reporting and analyzed that property and knew that they can flip that property and make some money. You need to be able to get the money first, property second. And this is the strategy that we want to teach you tonight. So money is powerful, and it is a power tool in real estate, okay? Never try to secure the property first without having the money to negotiate. A lot of times, depending on if it's a private seller, you have better negotiating tools and better negotiating skills or better negotiating contracts than working with a realtor that's just trying to get you to put a $15,000 or $20,000 earnest fee on that, where a personal or individual negotiation may only require you to put $1,000 and say, I'm gonna take this off the market. Here, let's do a quick contract on $1,000, and let me take this property off the market while I go and figure out what I'm gonna do and work on my other details, right? The more that you can present to a buyer that you have your sources ready lined up, the faster and the more motivated you're gonna see that seller is gonna be to provide you that property that you're looking to invest into, right? Money first, property second strategy also allows you to get into real estate investing with no money out of pocket. Why? Because a lot of times when you go to the hard money lenders, they have a whole complete laundry list of things that they require from you. Depending on the state, depending on who you're working with, depending on the legal laws of that state, there may be too many hurdles to go through, but a cash transaction is way more different than a transaction that you have to find a finance company that is attaching a property or an asset to a loan, right? We all know the story. You go to a car dealership, you purchase an $80,000, $100,000, $200,000 car. You're going to finance, if you're going to finance the vehicle, it's attached to a lien. Until that lien has not been satisfied, until that loan lender has not been paid off, guess what? That vehicle is still under ownership of that lending institution, okay? So securing the funds first provides you what? More of a buyer credibility standard. it raises you up as an authority figure to say, listen, I know what I'm doing. I know what I'm doing here. And the reason why is because I've been doing this for so long, or I have my money and whatever the case is. This is what helps you become a more credible buyer in the real estate market or investment market than you would if you were to say, okay, I love the property. Here's a quick $100. I'm going to come back and go get to my lender. My lender's going to come back in 3 days. That property's been sold. Forget about it. Okay. So time is essence when it comes down to purchasing real estate. So money first gives you an idea of how much buying power you have. This is an important point, right? So if you know that you've secured $300,000, you know that you can go shopping. It's almost like an open checkbook of what we call a line of credit sometimes in our industry for other industries, right? It's an open checkbook to know where to shop. If I am looking at properties that are in the $150,000 or maybe $300,000 or $500,000, if my bank does not, or my loan does not match what the property value is, then obviously I need to bring down my expectations. All right. It's all a snowball effect. You don't have to start strong and hard on a $500,000 property. A lot of times it may be just that simple little block that you walk through a little bit before you, when you go in the morning to that bodega, pick up that little, coffee, and you're driving by and you see 3 properties. They're all $50,000. That's $150,000 worth of properties. If we can get you $300,000, do you think we won't have enough money to be able to put into those 3 properties, pay cash, and now be able to have enough rehab money to now secure those different types of properties? Of course you do. All right. So it's all about the multiplying factor. If I buy 3 properties at 150 grand and I have $50,000 to invest, then that means that I've gotten into these properties without having to put anything out of my pocket. And I purchased these properties using what? OPM, other people's money. It's all about using other people's money to secure your financial well-being in the future. All right. This also gives you the power to negotiate better. A lot of sellers, when they hear that there's money in hand, there's a different emotion when they hear there's money in hand to be able to purchase that property free and clear than having to say, okay, I got to go get my money. They don't know. They're at a 50-50 chance. I don't know if he's coming back. I don't know if this is this. I don't know if he's serious. I don't know if she's serious. So what we want to do is make sure that you secure and make sure that you find yourself credible to them so that they can now continue through that emotion, that impulse, I want to sell kind of mentality, and now create more money transaction, more cash transactions than either securing it through a lending institution. We know a lot of times, a lot of us that have purchased homes, personal homes, and has, sold this home and moved on to another home. We know what we found at times is that there may be many people that walk in and do a walkthrough through your house, but we don't know everybody's financial, report. We don't know what they look like on paper. So a lot of 10 people or 20 people, your realtor can show 20 people the property, but we don't know who has the qualifications to be able to purchase it. So therefore, a lot of times we almost get into a defense mechanism as a seller, and now we don't know who's going to be able to secure it, put a great offering or whatever the case is. So this gives you a better negotiating power when it comes down to reaching out to private people that are selling their homes that want to get out of it, right? This provides you the ability to close the property sooner. Why? Because the more that you have money in hand, if you get $300,000 not tied to anything, but you get $300,000 or $200,000, and you now approach a seller, there's no appraisals, there's no having to check this or check that or check this, which is what a lot of lenders do. You can now, of course, make the right decision on a property much sooner and then put your down payment or either a good earnest down payment and make sure that you put them in a better state of mind, the seller in a better state of mind, so that they can continue the negotiating process with you. This allows you to bypass and save money, what? Reducing the lengthy lender compliance process, lien checks, appraisals, collateralized related fees that can be very high and at times cuts into your profits. Why get into real estate if you're only making $1,000 per property? That makes no sense. Most lenders or most national real estate investors are looking that you at least make a minimum of 10% profit on that property. And this will also continue to grow, right? Side note, I want to let you know this. If you can create an opportunity with a hard money lender that can pay for, the 100% of the property and also pay another 150% or almost the whole complete 100% of the rehab, the more that you have that relationship with that hard money lender or any of these lending institutions, because maybe you want to hold that money to secure it for cash, things that don't accept credit cards or the loans, you have that cash transaction. The more you build a relationship with these lenders, it will increase your buying power with them. I promise you, we've seen it so many times. We have that first flipper that gets that first loan, and then combines it with the hard money loans, and then you liquidate it within 60 to 90 days. Now that they saw that you did that on a $150,000 property, guess what? The next time around, they're looking at a $300,000 to $500,000 approval ratio, and then all of a sudden you get into the millions, and then it's an open checkbook. Now all of a sudden you have 20 doors, or you have 30 doors, and now they are just moving money along the lines, right? You have 10 properties all working at once, or 20 properties all working at once. You make the connection with the right GC that's going to provide you what you need, so that they can continue moving and flipping and going into that snowball effect, creating that generational wealth, right? So funding your real estate investment using OPM is very important. This is a no money out of pocket game changer strategy, okay? So the first phase, I want to get into the details of the first phase. And the most important thing about first phase is because it has to be done in phases. You get the first phase of that money that you need for down payment, liens, and all that good stuff, which is not attached to an asset or collateral of the property. And I want to right now take the opportunity to introduce Craig again, so that he can go into the details on some of these guidelines that a lot of these lenders are requiring, which is, it's amazing that a lot of these lenders won't even ask the questions. Are you using it for a property? Using it for Airbnb, or using it to flip or buy and hold? But I want to transfer this right now to Craig, because he's going to be going over through the details of what this means when it comes down to first phase funding for your first flip. Craig?
Hey guys, it's Craig. Thanks, Hiram. I just wanted to go over a couple of things, right? We're focusing right now on startups. How do we get into the game, right? So keeping a W-2 status, I want to go back to that real quickly. If you're in a W-2 status or you're employed, that makes it a lot easier to get into the game, because now you can get access to working capital or actually cash to get into what you're looking to get into, right? When we're talking about hard money lending, hard money lenders out there they're all generally the same when it comes to the type of programs they have, the rates, and what they're looking to do, right? The key things that run that your loan to value difference, right? So the main thing that happens there is they're looking at your, hold on a second. All right. Hey, sorry about that, guys. Hey, can everybody hear me? Thomas, can you give me a thumbs up if you can hear me?
Loud and clear.
All right,
We
awesome.
got you.
Sorry about that, guys. What I wanted to get back to is the two things that really run the annual percentage rate that they're going to give you, and what the loan to value difference they're going to give you on a property. The first thing is your credit, right? They're going to look at the business owner or the individual's credit, depending on how you're structured. The second thing they're going to look at is your expertise. How long have you been in the business? Is this your very first house, right? So those two things generally run what the loan to value difference would be on, let's say, a fix and flip, right? A fix and flip program on a normal hard money lender is where they'll pay anywhere from 75% to 90% of the as-is price of the home, and then they'll pay 100% of the rehab, and then obviously whatever's left over would be profit to the client, right? So it would be definitely profit to you. So with that being said, most of the people that are here tonight are probably in the startup bucket. So that means we're going to have to come up with $25,000 on a $100,000 home. So the reason why we wouldn't put the money first is because I see this a lot every day in what we do, right? I'll see a client come in and they'll have a property that they're looking at, and then they'll come to me and we'll get them a letter of intent out for the hard money, and then give them the liquidity requirements or the down payment requirement. And then that may end up being too high for them, right? Because they may have they may have picked a property that was a little bit too expensive for what they were willing to do or what they're able to do, right? So it's always better to get see how much you can get approved for upfront, and then go shopping for the property, right? So you have that bargaining power, and there's two ways to do it. If you're looking at of values that are higher, then we're going to do the math on, okay, well, if I'm looking at properties between 300 and 400,000, my average loan to value is 75%, then I'm going to have to come up with X amount of dollars, right? Because there's going to be that loan to value difference. Startups is 25%. You got escrows to worry about. You got closing costs to worry about, origination fees, appraisal fees, all of these, and then liquidity requirements. Some hard lenders will have you, want to keep that, have 3 to 6 months worth of payments left in your bank account for the next 3 to 6 months. So those requirements can be avoided in the very, very beginning if we're looking at cash, right? So up to a $300,000 loan, cash is king. All those requirements go out the window. Sometimes you can bypass an appraisal and do a BI, a broker index, as long as the property makes sense, right? So my finance officers are trained to uncover all of the different things that could provide those types of, or provide that type of capital, right? We're going to look at personal loans. We're going to look at installment loans. We're going to look at revolving credit lines. Some clients, some of you may have 401ks out there, or IRAs that we may be able to roll over and do a cash out, or base it on a loan to get into your first property. There's credit partners on the corporate credit card side. My finance officers are trained to uncover anything that would be available to you to get into that first property, because that's the key thing. Once you get into the first property, it's all golden from there, right? So, but the two things that really drive it is obviously credit, right? And credit and how much you can pay back at the time. So it's not about what you need, it's about what you can pay back. So if you're still in a W-2 status, let's take advantage of that status, because you're going to need to show improve income for certain types of installment loans, right? So we can get that up front and then go shopping, then go buying, because you'll save a lot more money that way by having the money up front, right? If you're looking at higher than 300,000, then we'll do the reverse math again and talk about what kind of money we can get you for that bridge, that gap loan, right? The difference between the loan to value, stuff that you got to get in, right? Because the key thing is that whether you're buying or keeping or buying or flipping, you've got to be able to get into the home to make it all happen, right? So if you're starting off low and you're looking at certain things, because a lot of hard money lenders, don't forget, a lot of hard money lenders have a minimum requirement. They don't want to do less than 75,000, sometimes less than 100,000 of an as-is price, depending on the zip code that you're looking at. So when we have clients that come in and they go, I have a property, but I don't have any money, then we know we're behind the power curve already, because I can get a letter of intent out, right? And I can get that out to you right away and you can present it, but then we got to worry about the bridge money. Where's the bridge money going to come in? So that's another process. And by the time that stuff happens, it may or may not happen if the property is still there, but most of the time that property will be gone by then, right? So let's have the money first. And even if you're going to do a hard money lending, if you got the money up front first, we can close those in 5 to 7 days, not 30. You know what I mean? So it's important to try to use OPM, other people's money, and get qualified for it now. Our finance officers are trained to go through every single step of every possible funding option that's out there for you to get it, right? And we're always going to guide you too, because cash is king. You need to save your cash for the things that are needed for cash, the actual bring it to the table money. Things like home inspections, appraisals, realtor fees, all these other little minutia things that you may find yourself with. Let your revolving lines of credit that we can either provide you with those, whether they're corporate or personal, or if you have those, utilize that revolving to keep your cash as king for when you go to closing. So it's a nice smooth transition. You get in, you start the rehab, you flip it in 45 days. I'll share one quick, which I still think it's amazing. I want to share one quick case study that I did, or that I helped. It was about 1.5 years ago. There was a first-time property investor that we had gotten him corporate credit card lines, right? He had got a $45,000 Amex and like a $30,000, I think it was a Capital One, and then we got him some tier one net 30 accounts like a Home Depot and stuff. This person didn't want to use a GC. He wanted to do the Home Depot weekend version of it, right? But he had found a duplex for $39,000. The seller just happened to have the ability to take a credit card because he had owned other businesses, gas stations. So I advised the guy to, instead of liquidate and try to go out and get cash, just go ahead and throw it on your interest-free credit card I just got you for 1 year, and go ahead and run it through his merchant and pay him his $39,000. He hands you the deed. He went over to Home Depot, him and his buddies, 2 weekends, flipped that property for 108,000 in less than 30 days. So there's that version, and then there's all the way up to the $400,000, single family home, 400K turnkey rentals. We have all different types of programs for that. And throughout this webinar, you will see our link to go ahead and make an appointment with one of our FOs, because they'll definitely be standing by to talk to you individually, because everything is unique, right? Every situation is unique. Every person is unique, all the way from the types of money that we can get you, where the regional banks are that may be able to help in your location instead of nationwide banks. Hiram had already brought up, the credit unions, because we're going to look in that area for credit unions that are in your area that may have some lower guidelines. But generally, if you're making over $40,000 a month in $40,000 a year in provable income, and you have a 680 higher FICO score on all three bureaus, we could definitely get you that bridge money, the gap money, and or in some circumstances, depending on the income, we can get you as high as 300, 400,000 in cash, so you can go use and do multiple properties at the same time. Because you would either have the down payments and the upfront monies needed for multiple properties, or you go pay cash for 3 smaller properties like Hiram had suggested with the $50,000 properties. So I wanted to make sure that you guys know that the link will be here on the chat line. So if you want to make an appointment to talk with our finance officers, they'll be standing by. You can make an appointment, 6 days a week, 12 hours a day. So we're here to answer any questions and work any individual situations that you may have and go into more detail about the program. Hiram, you back?
I'm back. All right. So guys, you heard the first part of it, right? The most important part is okay, I've been wanting to get into real estate. I always say, right, I drive through properties every day. We live in Tampa, but a lot of times I'll go into, and there's a perfect, a wonderful coffee shop that I always go through in Tampa. But in that area, I always find properties that are like, there's like grass growing over the property, right? And what we find is a lot of times, like I'm saying, okay, so who owns that property, right? And we'll get into those details a little later. But what I find is that, okay, a $60,000 property that I've already gotten either revolving lines of credit, a term loan, or a traditional line of credit, I can take all 3 of those different combinations, and we're going to have our guest speaker here coming up soon, our surprise guest speaker coming up soon. But you can take this money and be able to invest it into these little properties, just knock on the door or do a little bit of due diligence in finding out the record and information on these properties, and just go and just make a quick cash offer. A cash offer speaks way stronger and heavier than you having to say, let me just go back to my bank and see what I can do, right? Super important. So one of the things that we were saying when it comes down to the first slide on first phase is getting that down payment money. First phase is getting you the money with these credit unions. These credit unions are just crazy ready to give money right now. Why? Because credit unions are member driven. We all know the Navy Feds, the Pentagons, and all these credit unions that are out there. But these are the big, the smaller credit unions are willing to loan money because they have more members with more money than they can actually provide as far as funding. Okay, so this is important. I can find a national credit union out of Wichita, Kansas that you've never heard in your life, but they have about $100 million ready to invest into you that are not looking for assets or collaterals to tie this to, right? A lot of times we are under the consumption that property, assets, cars, if we're doing Toro, some of us may be here and have a passive stream of income through a Toro, or you're in the trucking business or whatever. And we are finding out that a lot of these lenders want to attach something to that property because it really reduces that risk. But as we look into the second phase, the most important thing is that first phase is going to get you that down payment money and anything you need. The second phase, a lot of times you can use those hard money lenders, because guess what? Hard money lenders will do the evaluation if we even need them, right? This is a if we even need them opportunity. Not that we have to go to a hard money lender, but there may be the time that you get $112,000, and that is not enough to flip that $1 million home. I'm not saying go flip your first home. It has to be $1 million home. Start small. You will see that snowball effect. You're going to learn from that first property. You never want to make mistakes on There's a big difference. Making a mistake on $1 million property and making a mistake on $100,000 property. So take your time when it comes onto this, because the reason why is because those mistakes are going to be much smaller, not in the $1 million category, right? So with the second phase is what Craig was saying a little earlier. You can utilize some of these hard money lenders, and they're all over the place, right? They're all over the place. They're willing to give you money. But the important thing is that a lot of these hard money lenders, if you have $100,000 sitting in your pocket and you actually go to the sitting table and say, you know what? I just purchased 2 properties, but I can use another 2 more. Why don't I take the first phase, right? In this first screen, take the first phase of this $100,000, and instead of buying these 2 properties cash, and they're asking me a 80-20 LTV split, meaning they'll give you 80% loan to value on 100,000. But why don't I take all this first phase money and now convert that into a bigger opportunity where I can get 4 properties, only putting 20% down on each property. And a lot of these hard money lenders will be able to secure the back end portion of it, which is where your general contractor comes into play. And then in addition to that, now we look into revolving lines of credit, right? Because the revolving lines of credit takes care of what? The screws, the nails, the paint, the carpet, the roof, and all those small little things through Lowe's and Home Depot and Menards or wherever you live in the United States. That's where this comes in. It's all about getting into your first flip. Don't go crazy on looking for that big old home. The first way that you want to experience this is starting small. And then as that snowball effects comes in, I can't tell you how many times, and the LFG team will testify to this. Herman knows this. We will find one person that starts out with a few small little properties, and all of a sudden in a year or 2 years, they have 12 doorknobs, you know what I mean? Or 12 doors, excuse me, that they have under their belt. And guess what? The more you have under your belt and you can show receipts, right? Because what? Herman says it the best, success has receipts. That is the same thing when it comes down to a lot of these lenders. They want to see when you're starting to get into the $1 million or $2 million that you need from them. They're going to say, okay, show me your receipts. What have you done? Do you even have a GC? Do you even have a property management company that monitors these homes for buy and holds, right? This is a whole new entity, guys. I'm just going to drop this on you. If you have one company that handles all your fix and flips, all of a sudden you have a GC that's not working for you. That's a different entity. It's paying you passive income, right? You got to create these streams of income. The first LLC provides you the buying and the holding and doing everything that you do. Now you have a GC contractor that works for your company. And then the third company, guess what? Is a property management company. You got 3 streams of income by starting this process, just the same way that we're telling you right now. But don't go all out on $1 million property. You just start small. When you see that snowball effect, and all of a sudden you start seeing that money grow in that bank account. All right. So Tom, I want to introduce you to Thomas, because Thomas impresses me every time that I sit on a 20, 30-minute conversation with him. Amazing. Thomas Dion had brings so much value, and just, again, sitting down with him and just hearing all the things, how he just takes money from credit cards and just liquidates them and then does a balance transfer over to the 0% card and restarts the whole process again. And there's nothing like getting credit cards for 0% or getting any type of loan at 0% or revolving lines of credit at 0% for 12 or 24 months and be able to use somebody else's money at 0%. I have no clue how he does it, but Thomas does it day in, day out. Millions of dollars in real estate out here from Florida. And I just want to introduce you to our guest speaker, our surprise speaker here today. Just dropping some nuggets and some knowledge here. Thomas, please take the floor. Compounding different funding sources.
Thanks, man. I was just thinking, I've had clients that have paid tens of thousands of dollars for what you guys are giving away for free here. I feel not qualified for a lot of things, but this I feel pretty qualified for, because I was a real estate, and still am. I'm selling a property this month, but I was flipping houses left and right. I was using hard money, and I still would if I had to, but I don't. And I just think that right now, I used to work with all real estate people and real estate flippers. I would say 90%. Now it's every type of business under the sun. And I just forget, real estate is safe and it's easy. you've got a lot of people on this webinar. Like, if you're opening a pizza shop or something, you're taking a, you know, who knows who's going to show up. But when you're buying a house and you're flipping it, you have an asset. It's something. It's just a safe thing to do. When I talk to people, I'm thinking, this is where I just love. I miss this more than I wish I had more clients that were doing this at this point. But what I was doing was using hard money. At that point, it was 12%, 2 points, but I was flipping every 90 days, really. And when I really put everything in an Excel sheet, you think you're borrowing money at 12%, but you're not. You know, it's not just the 2 points. You know, if I had a HUD, I'm in a spot of the country where I'm buying houses for $50,000, $60,000, $70,000. And I remember a $60,000 house at the end of the HUD statement on how much money I'm going to owe when I pay this loan off. It was $73,000. And it's only 2 points, but there's Craig named a lot of fees. There's all these fees. You can call it a point, you can call it whatever. But, you know, when I did the math, when I was turning houses that quickly, that 2 points and 12% was really a north of 25%. If you really do the math, the quicker you turn it, the more you're paying those points. I used to tell people, you know, if you're borrowing $100,000, you know, 3 or 4 times in a year, you're not borrowing $300,000 or $400,000. You're borrowing the same $100,000 over and over. So people actually offered me what I'm selling right now, and I said no twice. And I had to try to remind myself of that because I didn't get it at the beginning. But what I started doing, I just did the math. I started flipping houses on unsecured money, whether it's credit cards or installment loans or whatever. And I would go buy, I could still remember the HUD on this house as the time of the year with the tax. The taxes were in my favor a little bit, but $60,000 house at closing, $60,800. And all that money that they're sucking up right there, that's where they're getting you. And if you go and buy that house cash, you're paying that $60,800. And I started making a lot more money than that. I did all the calculations. I was saving $17,700 per year per $100,000 I was using. I was up to like a 7-home inventory where at any one time I had that many. And I believed in this so much. I'm like, I'm doing this now. And that's what I do now is I help people get money. And I think the way that what I'm about to tell you, it's super great for people that are starting out, because I don't care in real estate. I don't care how much money you have. You need more. Okay. So I deal with some people in certain parts of the country where this is the money that we help them get is good for down payments and to skip the draw money on the rehab. If you've done it, you've got to sit there and pay inspection fees, and then they come in and they decide if you get a little bit more of your money. That gets old really quick. So what I learned was how credit worked. Well, I kind of knew it already. And if every real estate flipper would spend a couple of hours understanding this, they will save tens and, they will save hundreds of thousands of dollars doing it. And anybody can do it. I have a guy sitting right across from my office. He's not here now, but he has $350,000 worth of credit cards that he can basically borrow that money the way that I do it at under 3% interest. He can go buy the house as free and clear, which is Hiram saying you own the house. If you buy the house with cash, and it's not like if something goes, like, you own it free and clear. If you didn't pay back the credit card company, it's still your house. Okay, which is kind of, it makes me feel better. But he has an 810 credit score, and I believe most people don't do this because they don't realize they can honestly have their cake and eat it too. You can maintain massive lines of credit cards, installment loans, and have super good credit. Between me and my wife, we had $400,000 in credit cards. I settled on credit cards, but honestly, if I was in a market that had a lot of houses, I'll do whatever work, like, I don't care. I'll pay 5 and 8% interest all day long. Back in that time, I was just borrowing money at 0% I had certain cards that I could cash out, get the cash, and then I would pay that card off with a 0% card. And it's funny, this is a brand new thing today. I still get them every day. I get them all the time. This is 0% for 18 months. So I'll just pay off the card I cashed out with 0% for 18 months. We did that. I would have $300,000 in play. My wife's credit score and mine would go from like a 750 to a 630 because, and if I had to teach, if you don't understand credit, just understand credit utilization, just Google it and figure it out. Like it would go from a 730, 740 down to a 620 when I was totally maxed out on $300,000 worth of credit cards. I would sell houses on a Monday. I could pay those credit cards off on a Tuesday. I could rapid update. By Friday to have a 750 credit score. And once that fear is out of people, you really have a way to not have to sell the hard money guy on everything, not have to cut him in on your deal. And if you do have to do it after this, you're doing really well. So that's not bad. But there's a way to do it. There's no blacklist of people that can't do it. You just learn, you have to get with people that understand how to get money and how to regulate your credit. And you can really, this isn't good for getting $10 million. And
Thomas,
yeah.
I'm sorry to interrupt you. Say it one more time. You have to do what? You have to be able to monetize and be able to manipulate what? You just said it right now.
Your credit.
Because everybody has to see it. There you go.
Yeah. No, you need to understand your credit. You need to not be scared of it. You need to use it to get through the first step of this, which is when I've heard two people say tonight, I bid on 27 homes before I got my first home. And when I got the first home, I'm like, why the hell was I so picky? You just need to get through it one time. And if you get your credit down and you understand how to use unsecured money, not just hard money, I'm just telling you, real estate becomes a lot easier. It becomes so much safer. And I don't know, that's the way I did it. And if you do it right for long enough, you're really not going to need your credit. All I'm saying is, do not worry. What you need to do is get around people like you're around now that can help you understand how to get, maintain, and utilize a lot of credit, and cut out the hard money guy, and give yourself time to where you don't have hard money payments to make this thing get going. It's simple. And it's funny because, like I said, I rejected it 2 times before I started doing it, and then changed my whole business to start selling it. So I just think people are on the super right track here. I think if you don't get the money part right, you're going to be spinning your wheels a little bit. So if you have good credit, or in my case, like I have certain people that I've worked with who have 5 family members who I've gotten money for, and they use that as a pool of money to start flipping houses. And if I just feel like people are on the right track if they're going to do this. You need a decent credit score, and if you don't know how to have that, it's very easy to get there, or find somebody that's doing it. I just wouldn't overlook using unsecured money for getting houses. That's what I've done. It saves you money in the beginning. It gives you time in the beginning, and you're ready for the biggest thing with when the best house that you've seen all year comes up and you don't have money to grab at to get it, or you're tapped out, you're going to be hurting. That best house of the year, you need to be able to jump at. I think using unsecured money, like you're saying, Hiram, is realtors, if they have 2 offers the same price, and one's cash, which is you've borrowed their own money, because they don't know, all you're doing is
cash is king.
Yeah. Who do you think they're going to mess with? They're not messing with a guy who has a loan that's going to get messed up down the road. I got so many houses bidding even a little less than a guy that was trying to use hard money because they thought the guy was a rookie and it's going to fall apart in 30 days, going to have to start over again. So I just think this is a I'm just comparing it to what I see every day, and I'm thinking, you really can't mess this up. You should really fill out the link that they were talking about, see what your options are, and then, have the opportunity to bid cash in the beginning, and give yourself time to learn how to do this. You go through it one time, I just think it's great. If you've done it a million times, then that it doesn't matter how much you've done this. Every dollar you can get your hands on is a dollar that makes sense. And this is not something you do once or twice. I don't think there's anybody that with a little bit of time and energy can't build a what I call a portfolio of credit to be able to go out and grab that thing when it happens. You got to be ready to jump when you can. And it's hard at the beginning when you don't have any money. Like when you don't have cash, you're going to need to be able to, you need to spend literally a couple hours figuring this out. And I think you can kill it. I was thinking of a few other things is, I really believe that with real estate, I've had people I have clients that have paid $50,000 for the stuff that you guys are literally talking about. And I'm like, just go buy a house. You should fill out that link, figure out how much money you can get, buy a house. And, unlike a guy who is opening the pizza shop that I deal with a lot, if you mess up, you still have a house at a low cost. You really can't mess this up that bad. And I don't know, I learned kind of on the fly as far as, how things work. I just think I think you got a good thing going here as far as getting people the money, getting the money part solved first is super important. I don't know if there's any other steps you want me to hit, but for me, I think of everything in 1, 2, 3, like step one, let's see what we can get, let's see what our options are as far as how much money we can get and what we can go and buy. If you're in a market where you have to buy houses that are a lot more than 300 grand, which is not the end of the world, you're going to need down payment. You're going to need to hopefully skip the rehab type loans that, you don't have to skip them, but I'm just saying, if you can just go to Home Depot yourself, you're infinitely better off and much less stressed out. And so I just think, it's worth figuring this part out. It's really easy. You can figure it out in a day as far as what you need to do to get in a better spot. So if I can, hopefully we can help, more people do that.
Absolutely. So one of the things that I love to cover here with you, Thomas, because we covered that a few months ago when we were talking about some of the no hard inquiry programs that we have, right? So in order for you to get, it's almost like what Craig says all the time. It's like window shopping through the mall. You can see through the store and see, okay, I like that, and then you obviously make the offer and go inside. But a lot of what we try to do is be able to provide no hard inquiries. So even if we have, like, let's say we have in somebody's state, let's say, for example, in Pennsylvania or Kansas or Texas or Florida, we're able to find these small little credit unions that are offering single digit rates, which a lot of the hard money lenders, they start somewhere in a 7.5 to about an 8.5%. If you are in that prime sector, but credit unions are because it's not asset based. We see a lot of single digit rates that still ends up being much cheaper if we can get a lot of different offers all in one shot, where we can get 4 credit unions or 3 credit unions to give us an offer, a stacking offer. And when I want to kind of, touch over that. Stacking means when you take one lender that gives you, let's say Bank of the West gives you $80,000. You have Bank of America that gives you another 60. You have Citizens that gives you another 90. And by the time you take all these different offers, we have a combination of $300,000, right?
Yeah.
So this is amazing when you have the opportunity to use a system like ours, that we can now shop all these different lenders to give us a combination of all these lenders or offers. We can now use this for bigger opportunities. So you have to almost get yourself in a position and a mindset that you have to be able to know, okay, I have this payment that comes out in this time. But I've already gotten into this ship called real estate investing, right? So the power of revolving lines of credit, where a lot of times we'll find one lender that gives us a line of credit of 100, another lender that gives us a term loan for 80, which is 180 grand, and then we got another $100,000 more in credit cards, which a lot of these credit card companies are offering 0%. 0%. You can't get cheaper money than 0%. But it covers things like rehabs, bridge money, property liens. Again, this process is not something that is the normal. It's not the conventional stuff that you go to a hard money lender and they provide you, okay, this is what we have, the asset. We're going to place a lien on this asset. We need you to conduct yourself per our guidelines and our terms and conditions, right? A lot of times we may be able to do our first flip on a duplex, right? I'm from New York City. We lived in a brownstone that was 3 floors, but guess what? My dad on the basement created another apartment. So now there was revenue coming from that basement. The second floor was paying rent. The third floor was paying rent, and we lived on the first floor. But a lot of hard money lenders do not want to interact with you the moment that you say, I am going to live there. This is the alternative. This is the creative way to be able to have free rent and have your mortgage paid. And then let's do rinse, repeat, and let's do it again, right? So a lot of times we say, okay, so a lot of credit unions, especially in big cities, are very oversaturated, especially with a lot of the national, military base, membership driven, or you got to be some sort of affiliation, or you got to be able to do this. But there's a lot of other credit unions that are out there that don't require you to be in a certain jurisdiction, but they will provide you single digit terms. So that's one of the things that we were speaking about a few months ago, Thomas, that a lot of these lenders, a lot of people don't know where to find. There's thousands and thousands of lending institutions all over the United States.
Yeah, you've really got one shot to figure it out. That's why I would use somebody who does it all the time to figure it out. And I think that, and this is an assumption, pretty good one, I think. Most people think if you do that, you're going to have to sacrifice your personal credit. What I'm saying is you can actually make your personal credit stronger and borrow money very cheaply. And stacking, you can call, like we talk about stacking. I mean, between me and my wife, we had 20 something credit cards and lines, and we can maintain credit scores that I can get whatever the hell I want whenever I want to, as long as I'm applying, right after I sell a house and pay something down. And it's just, it honestly, I credit it to getting me to where I am, because it made things safe and easy. I could go at my pace a little bit more and learn. I would totally stack it away as far as credit cards, lines of credit, whatever, because especially if you're in a spot where you can buy the house free and clear, I promise you that 2 points they're charging you is not 2 points. They're charging you 18 different, they just take the word fee and go to the dictionary and pick 10 other words and put it in front of it. And then they call it that. It's not a point. And it's just bullshit, whatever. It really got to the point where it's sucking my money out. And I started flipping on credit cards and thinking, you know what, if it hit the fan, I'd rather tell Bank of America to go shove it than the hard money guy with a lien on my house. I never had to do any of that, but it just made for a better gig. I had plenty of clients that they had entrepreneur credit. You could use anybody's credit, get this money. You can actually buy houses on credit cards. You can buy them with installment loans too. Just like, W-2 is a big deal. If you're a W-2 person, you can get all kinds of straight up cash money. But what people should really open their minds to is using mini banks, stacking and whatever, come to understand that you can do this without sacrificing anything. You're kind of playing the banks against themselves, and give yourself kind of a, if you're competing against another real estate investor that's definitely paying hard money rates, I'm telling you, you can offer a little bit more money and you will win more properties if you can just offer another $1,000, $2,000 cash than some guy who has to factor in the hard money guys alphabet of fees. You know what I'm saying? So I would fill out the link and at least learn where you're at, because I don't care who you are, you're not very far away. I've got a guy in this office, 810 credit score, $330,000 worth of credit cards. You can have your cake and eat it too with it. And it's just a good way to get going.
Perfect. Thank you so much, Thomas. I truly appreciate you, man. Listen, it's always nice to have you on board with us anytime that you're with us. But guys, it really comes down to two things. Either you want a perfect credit score that you cannot use because you want to keep that 700-800 credit score, or you either say, you know what, I don't care. Let me invest. Let me make money. Let me pay whatever that whatever money I borrowed, and then, you're in real estate. It's very hard to keep a credit score always that perfect 800 credit score, because you're always constantly going through that phase.
Yeah.
What was that?
If I'm making money, I'm not wearing my credit score and a badge around town. It can be a 630 for 3 days until I literally sell. I would literally sell the house on a Monday and have a 780 credit score on a Friday. Who cares? The whole point of having a good credit score is getting money that you can make money off of.
That's right.
So,
that's right.
All right.
Love it. Thomas,
I paid him enough money. It gets me fired up sometimes. I paid him enough money.
Good deal. I appreciate it, Thomas. Anything
No
else
problem,
you want to, any nuggets you want to drop?
No, man, I'll shut. I'm gonna hit the mute button. Sorry.
No, all is well. I just want to make sure you have time to with us. So I appreciate you being with us here tonight. But guys, let's go into
Hiram, I wanted to say something just real quick as well.
Please.
Guys, it's another way to look at it too. If you have an unsecured loan that you paid for an asset, if anything goes wrong, you accidentally knock down a load bearing wall, right? Or you find out that the home is on an Indian reservation. You know what I mean? You still have the equity in that home for emergencies, right? There's still equity there. So you don't have to worry about, they're just going to come take the house from me if something goes crazy, or I've got to go try to find an additional 50 grand because now, that space where we wanted to make the kitchen bigger, that was a load bearing wall, and the guy gave me the wrong information. We tore it down, and now it's that my rehab budget just doubled, right? Well, it's going to be hard to go back and get an installment loan that quick, but you can do quickly cash out on that property to finish it up. It may eat up into your profit a little bit because you ran into some bad luck, but you're in a much, much better financial position because it's not attached to the mortgage. There's no mortgage. So I just wanted to throw that out there as well.
Perfect. Appreciate that, man. Awesome. Thomas, anything else? I want to move on to the next slide.
No, I would just listen. I would listen to what he just said. I'll help you sleep at night. But no, I'm good. I'll...
All right, good deal, guys. So we're going to go into the next step here, which is basically executing on the property procurement on purchase. This is very important, guys. You really need to understand that this is not the normal. This is not, again, I've been saying this is not the normal. So a lot of times you don't have the lender really asking and requesting this information, because a lot of lenders are requiring you to do this because based on past experience or either loan application or application numbers or account numbers that they've worked in the past, what they find is that these are the things that we need from you because we've been burnt on these things. So the most important thing is executing on property procurement and or purchase to make sure that you are going into the right direction. Now, this is a whole total different class. And Herman, whenever you tell me you want to bring us in to how to do virtual walkthroughs and all this kind of stuff, just let us in. But right now we just want to give you a little bit of tidbit nugget so because again, most of the time when you deal with a hard money lender, they're requiring these things from you. But remember, when you're doing non-asset, non-collateralized loans, you kind of have to do a little bit of digging so that you can keep most of that profit. All right. It's not about giving your profits, just like Thomas was saying. It's not about giving your profits out to a lending institution. They already have you. The moment that you fill out the application with them, you got to find yourself in divorcing yourself and using too many of the hard money lenders and those national name brand big box lending institutions, and now condense that to a more relationship-based credit union, credit card, term loan, small local jurisdiction lender, right? We want to take the power from these big national lenders, bring it into your house. It's not about conducting business in their house the way that they want to do it because of their guidelines and because of their huge investor boardroom. We want to now condense that power and now move that power or transfer that collateral over or asset to you, because now you're in control. You already have the money. Now, how do we find and find these properties? So the most important thing here is that this is a profit requirement rule calculator. Find the Excel sheet and build this out yourself, because this is very important that you understand what a profit requirement rule calculator is. This is a after repair value. So if I take a property of $240,000 and then I have a holding cost, I'm going at a 3% holding cost, which is going to be $7,200, right? So holding cost means that when I acquire the property, there's a holding cost that I got 3 months or 4 months or whatever to pay. Let's say, for example, 3 months. Okay, I have to pay for the water bill, utility, the monthly payment on this, and all the different little things. So we have an estimate of $7,200, and then we have a closing cost, which a lot of lenders charge $12,000. By using our method, you don't have to. But if you were to combine the first phase, remember we were talking about the first phase, you get that first bucket, first phase money, and then you maybe consider buying 4 properties and using a hard money lender. This is what this scenario will look like. Cost of repairs. So on a $240,000 home, you connected with the right people. You got your GC, and he says, listen, this property all in is going to be about $50,000. Are you sure? Yes, it's going to be about $49,000. Are you sure? Okay, it's going to be about 45. But anyways, to average it out, $50,000. The required profit, you should never be looking at a property if you're not making at least a 10% swing on it. Why? Why would I get into this property and you might as well just demolish the whole thing and just rebuild it again? Why even look at a property that is not going to make you more than 10%? You should always be looking at 10% and higher, north of 10%. Okay, and the required profit of that 40,000 would put you in a maximum offer of 130,008. This is a combination of using that first phase, second phase, and then on using other people's money gives you the ability to have a maximum offer 130,800 with a funding requirement of $188,000. Feel me so far? Please stay with me. So after repair value, 240 grand, holding cost 7,200. A lot of us that have the connections or a realtor or something like that can flip this property for you, or maybe you are a realtor in your state, $7,200 cost. The less that you can pay on that holding cost, the better it is for you. The closer that you get it south of 3%, even better. And then a closing cost of $12,000 if you are using the hard money lender in a combination of first and second phase. And then of cost of repairs of 50, required profit of 40. That means that you are at a maximum offer of 130,800 with a funding requirement of $188,000. Okay, so this is kind of a quick synapse of what we look at as lenders, as brokers, as lending institutions to be able to build this up. This is the kind of the schematics and the kind of the rule that we use to look at these properties when we're analyzing somebody that wants to combine first and second phase. Okay, so find the investment is one of the things that I want to cover here, and we're going to start going through these different steps to make sure that we can answer as much questions as possible. So ownership info. You can find a lot of different platforms that can provide you this. So you already got the funding. Before you even get to find the investment, you've already acquired the money. You already procured the money. You already have the term loan, the line of credit, the revolving lines of credit, and all the different lenders that you have in place on the first phase to be able to say, hey, Hiram, you know what? I appreciate you. You got me 320 grand. Now I can go look for some properties. So finding the investment is ownership info. And there's a lot of different companies that you can use to be able to determine and utilizing this correctly. So ownership info, owner type, owner mailing address, ownership length, because it's important. How long have they owned this property? If they've owned this property for a while, maybe they're considering on moving on and selling this property, moving on to something else. Okay, number of properties that this owner has out of state, out of country owner, or linked properties. So one of the most important things that you have to analyze is ownership info before you approach any type of person, because again, this is very unorthodox. This is thinking outside of the box. You have to be able to find who that owner is. And again, there's a lot of applications, companies out there that offer these services. Just make sure that you invest the $12 or $18 or $30 for Skip Trace, and they offer all these different things. But you want to know what type of owner this is. You want to think like that owner. Am I ready? My kid just graduated college. They live on the other side of the states. Am I ready to move with my child because I miss him so much? They're going to be out there getting a Juris Doctor degree for 8 years, and they're only 18. Well, this person, it might be ready to sell you that property right now. But you need to know, and just like any attorney, they build the case based on known knowledge and past experiences. So you need to know, okay, is this person ready to sell? Because if they're ready to sell, why do I need a realtor? Why do I need a broker? Why do I need any of these people in the middle that are cutting into my profits? I don't need people cutting into my profits, right? I'm already going to pay interest or maybe cash or whatever it is in this transaction. I need to be able to minimize that risk and that profit and keep more in my pocket so that I can do that snowball effect, right? The second thing that you also want to look into property characteristics, property types. What is selling? If condos are selling more in Florida because everybody from the north is retiring in Florida, Arizona, and Texas, then we need to look for maybe a certain age group that is ready to let go of that property and move on to a new chapter in their life, retirement, property classification, property details, bed, bath, etc. Number of stories, right? We were talking about brownstones and sometimes duplex, like is it side by side or is it goes up or does it go side to side, right? Number of units, multifamily, school districts, homeowner associations. Is there HOA or COAs? Okay, we need to make sure that if the HOA on $100,000 condo in Florida, that sounds beautiful, but they have an array, they're on beachfront, it's super cheap, but they're on beachfront and they're charging for the tennis court, the pool, the sprinkler system, and all this kind of stuff. And that person that is going to acquire the property that I'm going to flip is now paying half of what the mortgage is. It may not be a good place to invest. Okay. Third thing, sales history. This is your comps. So a lot of people go to Zillow, or they go through a lot of these different companies or these different third-party websites to find out sales history, but or at least comps. But what the most important thing is finding out what the sales history is. Who in that block or in that neighborhood or in that complex, with the sales prices and dates, the sales info, the buyer info, the mortgage and the interest rates, assessed value, transfers, all that stuff is very important to you. Because as you're finding out what is going to be my bottom line, if my goal is to make $100,000 on my first flip, there's got to be a little bit of strategy into what you're doing in order to you find out is that going to be the best profit for me, right? Move on to the next, MLS details, listing pictures, list price and history, agent description, keyword search, active, pending, contingent records. This is all super important to you, okay? Then we move on to mortgage info. And this is very important because if you're trying to make an offer on a property and they owe more on the property and they're almost upside down depending on where their market is, they're not going to take that offer because nobody wants to pay $20,000 to get out of their home. Maybe not. I don't know. Maybe they have the money saved up. Maybe it's a property but right now, the way things are going, real estate is very strong. It's a seller's market. So we want to make sure, is there any open mortgages? Is there a mortgage history? Is there a loan balance? Number of open mortgages, loan to value ratio, seller carrybacks. Is there any liens or any type of things? Like we go to Virginia, where sometimes we'll see this the city, I think it's Newport, that charges a specific tax from like 1977, and then all of a sudden they've been charging taxes of $14 or $28 per month since 1977. We're now in 2022, and we're finding out that all these taxes have been accruing all these years. So the property may be very cheap, but then you have that lien that has to get paid before you even purchase that property. And then, of course, the lien and foreclosures details, the filing dates, delinquency amounts, auction dates, opening bids, default releases, lien types. I mean, this is important information for you to do your own due diligence. And if you can get anything away from this here today, any takeaways, is to be able to do your homework and become an expert in a mastery of your craft and becoming a real estate investor. All good, solid real estate investors do this type of work and homework before they jump into any property. Because what this does is that it gives them a clear assessment of is this property going to make me money? Hands down, that is the bottom line. That sum it all. Can I make money on this property? Going back in the segue of my lien and foreclosure details, tax info, access values, property taxes, tax exemptions, land values, improvement values, hit tax history, delinquent flags. This is all the things that you need to know in order for you to be successful and being profitable. A lot of times it's not looking at that bad foundation or that unforeseen situation that these walls got to get knocked down and do this. Yes, we can look at, all these networks are showing how to, evaluate properties and flip and make money. But these are a lot of the things that they do that they're not showing you out of these TV programs. Or a lot of times, a lot of people are not teaching this game because you got to pay me $25,000 in order for me to teach this game, because it's a very high level, profitable business. So with all that being said, find the investment, secure the bag. Step one, secure the bag. Second phase, if you need the additional capital, get the funding. Third phase, get yourself stacked on a lot of different types of different funding programs. And then of course, the fourth step is find the investment. I rest my case. Thank you for the opportunity.
Excellent, man. That was you gave him a little extra something. I appreciate that, Hiram. Thank you so much. Thank you so much. Now, listen, I've been getting a lot of side messages, side calls. Can we go over the program one more time for everybody? They got the 680, they got $50,000. They make 50,000 W2. They got 680, 700. Can you go over the details again? What are the data points for everybody that's coming in to get this funding for this real estate deal?
Makes sense. Good point. Okay, so guys, let's go through it all. There's different types of funding programs, right? So in the first phase bucket is what we call. A lot of lenders are looking for a minimum of that 660 minimum credit score.
Okay.
660 though is not that 680, which a lot of them look for. Mm-hmm. But the 660 just states, you know what? I got that $20,000 Bank of America card. I'm just a little over on my utilization. Herman knows best. Utilization is kind of a score killer. Mm-hmm. But as long as a lender looks at that score and says, you know what, they just have a little extra too much on utilization. We can't offer them any type of credit cards, but I can offer them a term loan line of credit and maybe some sort of revolving line of credit or something else, or hard money lender. So the most important thing is to understand that going in, a lot of these lenders are looking to at that 660 beginning score.
Okay.
Debt to income and payment to income is another factor. Debt to income, just like a mortgage, it's got to be somewhere around that 35%. Okay. So your debt to income, that means that every debt that you have under your belt, you got to have a utilization of 35%.
Okay.
Payment to income, you got to be somewhere in that 20 to 25% payment to income realm.
Bro, you got to tell them what payment to income is versus
payment.
What
okay.
Debt to income is. Mm-hmm.
Okay, so payment to income is going to be like when I take all my bills and my minimum, I got 5 credit cards in my payment to income. Every month I have my minimum payment, because when it comes down to credit cards, they usually take your entry level or your minimum dollar that you owe them every month. So a $5,000 card may pay maybe $100 to $200 or $300 on a monthly basis. So they take that almost like your student loans, and they take that and put it into a factor and say, okay, you need to be no more than this amount. Mm-hmm. Okay, so that's what your payment to income is. So if your income is $100,000 on a yearly basis, and on a yearly basis, your payment to income is somewhere around that 25. That means that $25,000 of your income is going to bills. That's your payment to income. Okay, so you got to stay under that. Mm-hmm. The other thing that you also need to make sure is that you have a utilization on your credit cards less than 40%. Now, if you have under 40% utilization or over 40% utilization, then you're not going to be able to get approved for revolving lines of credit. But there is also an option for term loans, lines of credit, and all that good stuff.
Now,
and then of course,
you brought up term loans a couple of times for people with high usage and with a 660 credit score, right? Darnell, you in the building if you got a 787. So can they use the term loans to pay down their credit cards real quick? And then, Craig is nodding.
They can.
Okay.
They can. Absolutely. So, but
I heard everybody pick that up. If your usage is high, You got a lower 660 credit score. We can get you in the building with some term loans, but you want to take that money and pay down the debt and hit the team back up to get you a real bag.
And reinvest.
Yeah. There you go.
Yeah. This is not an opportunity for you to go to Best Buy and get that QLED that I've been looking at with the frame, so that when my wife passes by, she looks at my pretty face on that screen every time she walks by. No, this is not that opportunity. The opportunity is for you to be able to get that money, invest it right back into yourself because your utilization is a little high, and then free yourself into now positioning yourself for real estate investing.
Thank you for that. All right. I stopped you at usage. We want it to be under 40%. Go ahead.
Yes.
Okay.
And Craig, Craig is anxious to say something. Go ahead, Craig.
Yeah, I just don't want everybody to get analysis paralysis, right? You know what I'm saying? There's, I'm retired Army, and y'all had so many acronyms, I was getting lost, man. So DTI, PTI, KP, it really doesn't matter. What you guys really need to realize is
OPP.
If you've got the score and you're close, let us do that for you, okay? We could do a complete, no money up front, risk-free review. I'm just asking that don't roll up in here with no 480 because my FOs, my finance officer, is going to leave me. All right. So if it's close enough for you to question it, come see us. It's free. We'll do it for you free. And then when we get the results back, we'll take the time to explain to you exactly what it is that may or may not be holding you back. And we'll address that and we'll fix it and we'll move forward. Piece of cake. So don't worry about too much DTI and all that kind of stuff. Most people that have bought a home before, a primary residence, understand what a DTI is, debt to income. That's all that is basically how much money you make versus how much money you owe on a monthly basis, which calculates how much money you got left over to tell the bank what size of mortgage you can afford. And they backwards do the math and go, you're pre-approved for a $350,000 home. Now that works in the primary consumer world. Now, in the business world, it's a little bit different, right? So the only DTI we're looking at, and when we say debt, guys, I don't want anybody there writing down, well, I pay $11 to Netflix and I pay, no, not that debt. We're just talking about reported debt that is showing on your credit. And then when we prove what the income is, either W-2, revenue, 1099, K-1 disbursement, all of those things, then we'll do all of that for you. So don't worry about trying to calculate that yourself. You'll drive yourself crazy. Go ahead and get our free evaluation for you. We've got very qualified people that are on standby that are going to not only analyze questions that you answer to the finance officers, and along with looking at a soft pull on your credit, within 24 to 48 business hours. It's generally 24, but we mess around with Bella Nation. You guys kind of crash my system down a little bit and it gets a little slower because you guys are so motivated. So you might want to give us another maybe half a day, but we'll get right back to you and let you know, hey, this is what you're qualified for. This is how it works. Some of you out there, and I've seen in the chat, I can't wait to talk to you, right? Some of you might have more than one approval. Yep. We might be able to put 2 or 3 or 4 different platforms together to accomplish what you want, right? But we can have all of those one-on-ones because there's so many. Everybody's unique. You know what I mean? Like there was a question that came in. Well, can you get a bank line of credit with no? That I don't know. There's too many variables. If you're looking for a business bank line of credit, I can tell you you got to have some really good credentials and financials, I should say, right? But for revolving or a line of credit, there may be an instance where you may have some cash in a HELOC, right? A home equity loan line of credit that might be available. Now, that's nothing that we do. We don't handle that, but I'm not going to sit there and withhold that information from you. If you're sitting there with 100 or 200 grand, 100 grand in equity in your home, and you can get a better rate than what you can get anywhere else, then use some of that cash along with some other cash, right? Whatever we've got, we're going to, from a consultative point of view, we're going to let you know what's out there and what's available to you. And if you decide to move with us, we'll rock and roll. It's that simple, man. You guys are, and I love you guys out there too, because I'm looking at my calendar and it's literally blowing up. I got all kinds of colors out there. So you guys, we're excited. We can't wait to help all you guys out there. So I'll shut up and let you guys go back to your stuff.
So what it really comes down to is this, guys. Listen, we need a minimum of anywhere. 50,000 is that minimum barrier, but at times we can see $40,000 minimum, right? That means W-2 income, right? So if you have $50,000 in minimum W-2 income, worst case scenario, $40,000 income, right? But that has all these things have to match. Now, for some of you that are 1099, some of you that are self-employed, you just finish your taxes with your accountant or whatever the case is, and you're self-employed, a lot of these lenders are looking for adjusted gross income of $80,000.
Whoa, okay. So if they
Adjusted gross
1099,
income.
they need to show adjusted gross income of 80,000. I was sending out the wrong news. I was saying 100,000. All right, 80,000 adjusted gross income.
Yeah,
Right,
$80,000 to start the conversation. Now, the more you make, the more you get approved, right? It's almost like that person that I connected with, and I did a consultation call and said, I'm looking for $5 million. Okay, great. How much is your business generating? None. What are we looking for? W-2 income. I just got let go about 3 months ago. I cannot prove to a lender that you have any type of means of paying that $5 million back. But if you have justifiable income that is provable of $50,000, yes. If you have, an adjusted gross income through your business of $80,000 minimum, that starts the conversation. Mm-hmm. But the more that you make on your adjusted gross income, the more that you can get for funding for this down payment play. So great, let's go. The opportunities are endless. The variables are there, but there's always an opportunity to help you out in getting to your first flip, buy and hold, or whatever you're trying to do in real estate.
Love it. I love it. This is great. So real quick, so we can recap. Minimum score 660, but we want y'all to be 680. Debt to income. I'm about to burn Craig up because I'm going through these acronyms. Debt to income to under 35%. Payment to income 20 to 25%. Usage on your credit cards under 40%. But most importantly, to everybody that's on the call, you make 50K W-2 and you got a 660. Just book the appointment. We'll figure out the rest. You don't need to think. I got a lot of people on the call like, well, how much is this and what's the percentage? Book the appointment. We'll figure all that out. All right. $80,000 adjusted gross income if you're a 1099, right? Book the call. We'll figure out the rest. Those are the minimums right there, right, bro?
That's it.
And then the rest, we're going to help you. Go ahead.
Just real quick, guys, this is the easiest thing to remember, okay? If we're looking at revolving lines of credit, okay, that means the credit is the only thing we're looking at. We're not even looking at income. We're just looking at how good and how strong the credit is. Now, that's just for revolving credit lines, whether our corporate stacking program or personal enhancement or fast track, all of those are revolving lines of credit, whether they're personal or business. That doesn't have a requirement. That is all on the strength of your credit profile with all of those acronyms that we were just talking about, right? Now, if you're looking for a cash loan, it goes by your FICO score and your ability to pay the loan back, all right? Just like cash is king out there in the real estate world, cash is king to the banks. If you can show them that you can afford that payment, they ain't worried about if you're 40% at your Kohl's card, right? They don't care if you're maxed out on your Old Navy card. All they care about is, can you make this payment, right? So I don't want you to get too confused. I don't want anybody out there thinking, well, I got to be at 40% utilization before I can apply for a $300,000 loan. That's not the case, right? So when we're evaluating in all these different programs, we do that for you behind the scenes, right? So you don't have to worry about it. We're going to automatically get you an approval, or if you're not approved, then we'll find out why on all those programs and go over that with you in the consult after the review is done and completed.
Excellent. I have a question. How old does my LLC need to be to sign up for this program?
1 day or 1 day. 0, depending on what you're using it for.
We love babies.
Come on. We can't make this any 1 day old.
That's
1
it.
day.
I'm about to sign up.
You know what?
We
prefer the ones that are less than a year old. We prefer the ones that are because we don't have to worry about if you guys remember to pay your annual fees or not. Because we catch that all the time, right?
And if you don't have an LLC,
you ain't done it yet.
And if you don't know Kevin Dosey, listen, reach out, get your entity set up.
Yep.
My boy right there is able to get you set up, and I can tell you how many times we funded deals because he knows how to structure these LLCs, these S Corp, C Corps. And we've gotten them funded because he knows how to structure them correctly. So if you don't know Kevin Dosey is Herman's brother, let's go. He's legit.
This is wow. You guys definitely over delivered tonight. All right, so this was really, really good news. So LLC is just a day old, and we're going to help you guys get into real estate. This is unbelievable. You've really opened the doors for a lot of people on this call tonight. Thank you so much. I really appreciate it. Do you have any closing thoughts, Hiram or Craig, for everybody we still got 500 people on this call. You still have any closing thoughts for anybody on the call tonight?
Listen, it's all about executing. I already told you, get that pen and paper. Hopefully wrote enough information down that we just gave you, we just overwhelmed you with that. And that's okay. It's all baby steps. So let's take baby steps and execute. We greatly appreciate everybody. What I do want to say is one thing. So help us help you. We're about to do a giveaway on an iPad. So just follow us on Instagram at Ladder Accelerate. Right, you see it right there on our handle. Follow us and give us a little love on there. And then we're going to choose a winner. We're going to be announcing it on Instagram. And somebody out of here that tonight, no strings attached, no purchase necessary, no financing necessary. We'll be sending out and announcing and sending you a nice iPad.
Thank you. I really appreciate you guys getting on the call. Guys, I really appreciate you guys giving up your Wednesday night. I know you guys are tired from work. I thank you for staying on the call this long. Listen, I've dropped in the chat a couple of times, all the resources, right? If your credit is not there, you took this call and you're like, dang, my credit's not there yet. I got the link for you right there. Check it out. We can do a free assessment, see what's going on with your credit. I got the link for the funding for up to $300,000 for real estate. I just dropped that in the link. If you like this webinar, please leave us a review on Google. We'll truly, truly appreciate it. And lastly, for anybody that joined tonight, we're giving a special $500 off for my mentorship that I do once a month. It's a month long. It's $500 off. I gave you guys the discount code. We go into, listen, we have a real estate person that comes on, right? Hiram comes on and shows you how to actually become the funder so you can get commission on helping people fund their real estate deals. Imagine if you became that person, right? So we're going to show you how to do that. We're going to show you how to liquidate your business credit cards at 0% interest so you can fund many other things. So the mentorship pays for itself, class one, I guarantee it. So we're dropping all the gems in the chat again. Yes, you need an LLC. Definitely DM me, guys, and I'll give you my brother's. Matter of fact, I'm going to give it to you right now so I don't get 500 DMs. Anybody that needs an LLC, I'm going to drop it in the chat right now. So click on it right now. So anybody who needs the LLC, I just dropped it in the chat. Your LLC only needs to be a day old, and then we're getting you funded. It's a wrap after that. We cannot make this any more easier for you. For the whole week, I said it was 680 credit score. Hiram just told me it's 660 minimum to get in. But we have a bunch of executors on the call. We don't do minimums. We want the maximum. So get your credit together. Let's make it as easy as possible to get you funded. Hiram, real quick, this is a secret just between you and I. It sounds like on the call today, you just told me that we have another business that we're going to start because you're telling me that if somebody has a 660 credit score, we can help them get a term loan to pay down the credit card debt so it can go higher, right? That sounds like another play right there.
That's another webinar.
That's another webinar. Okay, I already wrote it down. I'm calling you tomorrow. We're going to do another webinar to help these people out. I appreciate you guys. Thank you, Hiram, Craig.
Thank you,
Thomas. The Ladder Financial Group behind the scenes answering the questions. I appreciate you guys so much. Thank you so much, guys. Click the links that I shared to you guys. Let's execute. You guys have a wonderful evening. I'll talk to you soon. Have a good night.
Thank you.
God bless everybody. God bless.
Bye now.